Okay, good morning, everybody, and welcome to our Wednesday morning online seminar. Today we are joined by Jon Sharp, consultant solicitor for civil law, who's going to be looking at professional indemnity insurance and design liability post Grenfell. As always, Jon is happy to answer questions from you, and if you could use the Q&A or chat facility in your bottom toolbar, and he will answer as many of these as possible at the end of the presentation. Additionally, if there's something you don't particularly wish to raise in an open forum but would like an answer to, you can always email Jon Sharp at silverllp.com. That's Jon, Jon, and he will happily answer those questions for you. Okay, Jon, take it away, please.
Good morning, ladies and gentlemen. Professional Indemnity Insurance and Design Liability post Grenfell. You can't help but have noticed, I'm sure, that the cost of insurance has risen quite dramatically over the last 2 to 3 years. So part of this, I'll explain why that's happened before looking more specifically at design liability and indemnity insurance post Grenfell. I've been assisted in getting these slides together by Clear Insurance, who we work with, in particular Phil Lamb, and I'm very grateful to him as well. That's me. Less said about him, the better. All the details are on the website. So we are in a hard insurance market. It is the first hard insurance market since 2002, and it will be with us for some time. Be under no illusions that it's suddenly everything's going to be all right. The fact is, it isn't. What causes a hard insurance market? Well, as you can imagine, major market-wide claims. So claims that don't just affect one particular sector, but have a run over to all sectors of the insurance market. Second factor is insurance capacity. If you think of it like a Christmas toy, if there's only one shop selling the best Christmas toy, then it charges, guess what, a higher price for it. Whereas if there's many shops selling the favourite Christmas toy, then of course there is competition and prices are driven down. The reason that there is a lack of capacity in the insurance market at the moment, certainly as regards professional indemnity, is that for some time now, certainly since 2015, insurance companies have had to have solvency margins, which have been imposed by the FCA. They're also very much more tightly regulated now as regards to those solvency margins. And they must demonstrate that they have the capacity to pay claims as they fall due, those that, of course, they are going to pay. So gone are the days when a Mr. Ian Posgate, called had the nickname of Goldfinger, wrote business in Lloyd's. His practice was to write as much business as possible to get in as much premium as possible. But of course, that had exposure for him when the claims fell to paid. And eventually he came unstuck in a Lloyd's market inquiry in 1982, I think it was. Now, the last hard market was in 2002, and the causes were, well, the very tragic events of 9/11. As you can imagine, that hit the aviation market, that hit the property market, that hit the personal injury market. So, as you can imagine, major worldwide losses were experienced by a number of insurance companies. And to make matters worse, we had the worst floods in Europe in living memory in that year. And this resulted in an increase in premiums in no matter what sector you were in. So I remember renewing the firm's, my then firm's professional indemnity insurance, and found that it had gone up £25,000. To which I said to my insurance broker, hang on a minute, I wasn't involved in 9/11 and I've not been flooded. To which he looked at me very strangely and said, well, you know how it works, John. So major market losses do cause an increase in premium. The result of those two things, well, there was a short-term increase in the premiums market across the board. But the market balanced itself out and everything was all over within about 18 months, where premiums went either back down or at least stabilized. Now, unfortunately, 2000 and 2019, we are now in a hard market. Now, in terms of the professional indemnity market, the causes are Grenfell. I will move on to that shortly. Secondly, there was a Lloyd's review in 2018 of all the syndicates operating within the Lloyd's umbrella. And the result of that review was that Lloyd's found that most syndicates were not charging enough in premium. So that meant that Lloyd's said, you've got two choices. You either increase the premium so that we can be sure that you have enough premium coming in to pay claims in the event of a major market loss, or you get out of the business completely. And a number of syndicates took the option of getting out of the professional indemnity market, which meant that there were fewer insurers writing the business, and therefore they could charge more premium. There wasn't the competition element that I spoke about earlier with my Christmas toy analogy had gone. And then we also had a little thing called the 737 MAX. As you may be aware, 382 737 MAXes were grounded worldwide. Boeing have enormous amounts of insurance coverage. And, you know, as you'd expect, they claimed on that, and the losses are still being calculated to this day. As I said, the Lloyd's review, Lloyd's had concerns that premiums were not going to pay claims. What happens if a syndicate can't pay all of its claims is it has to call on what's called Lloyd's Central Fund, and Lloyd's obviously doesn't want that. So it had the review, and the result of the review was that there was a withdrawal of a number of insurers from the PI marketplace. Now, the 737 MAX situation has become an insurance headache. Boeing were commercial debt dominant between 1955 and 1990. They started off, of course, with their Boeing 707 iconic aircraft. And then they made the Boeing 727, which became the best-selling aircraft in the world. And of course, we all know what one of those is. There's not many of them flying still, but what a fabulous aircraft it was. Boeing had no real competitors. Equally, it had McDonnell Douglas and Lockheed, but until Airbus arrived, and Airbus has secured over 50% of new aircraft orders since 2003. So Boeing 737 was launched by Boeing, and it's the most successful commercial jet. It started very small. The top picture is a 737-300, one of the original ones. But they then built this 737 MAX, and it was built in response to the Airbus A320 improvements. There's arguments that it was rushed in design, and Boeing also made it probably slightly too powerful for the job that it was meant to do. They made it, though, of more or less the same design to get around the spares issue, so that various companies didn't have to order a whole load of new spares, but they also put an IT upgrade on it. An IT upgrade is not really Boeing's strength. And so they made 4 different versions of the 737 MAX, and they installed on it an MCAS system, a maneuvering characteristics augmentation system. All specifically designed to compete with the A310 and the Airbus A320. But unfortunately, and I won't read that slide, the MCAS system didn't work for the reasons set out there. So the aircraft, unfortunately, in 3 crashes where a great many people lost their lives, basically plunged to the ground because the MCAS system malfunctioned. And there we go. There's a total of 393 jets, and I think most of them are still to this day grounded. And Boeing, as a result of this, decided that what they were going to do was to operate a series of ferry flights. They also needed insurance for that, etc. But they had a policy that covered them for grounding, so they've obviously claimed on that. In terms of the aircraft loss, that was over 300 million loss. Passengers, unfortunately, if you die in an aircraft, you don't get paid very much money, and you don't get very much for your baggage either. But of course, they had grounding liability coverage, and part of the aircraft manufacturing product liability coverage, they had that as well. They had a 500 million sublimit for grounding and a 2.5 billion product liability policy, all of which they've claimed on, and I suspect the market has responded to it. Hence, we had a market-wide loss. Now, the Grenfell Tower, that has also, as everyone will know, had a significant impact on the professional indemnity market. The Grenfell Tower was built between 1972 and 1974. It was a 24-story tower block. Renovation work took place in 2015 and 2016. Ryden Limited carried out the refurbishment with the cladding and the facades. And the works included new windows, water-based heating system, and aluminium composite rain screen cladding. The original cladding system proposed was rejected, and a different combination of cladding panels with lesser fire-resistant quality was used as a cost-saving measure. Also, like many London tower blocks, a stay-put policy was in place in the event of a fire. Concept was that the blocks would be created by thick walls and effective fire doors, which would allow sufficient time for any individual flat in a fire flat to be brought under control. However, as we all know, and tragically, the design concept of the building never envisaged a full evacuation of the building being necessary. The original design concept as well might, though we await the final ruling on this, have been undermined by the subsequent refurbishment works, and in particular the rain screen cladding system. The fire occurred at 14th of June 2015 at 0054 BST. The fire, it's been established now, broke out on the 4th floor as a result of a fire in a domestic appliance. And at approximately 1:08, the fire breached the windows and rapidly spread to the outside cladding. Again, as we know, the spread of the fire was rapid because the cladding system acted as a giant funnel, and a major incident was declared at 2 o'clock, and 40 fire appliances plus command vehicles and operational platforms were engaged. They abandoned the stay-put policy, and it's estimated that unfortunately 72 people lost their lives. The local underground station adjoining buildings were also affected, and as the risk to them was evaluated, people from surrounding properties were moved to temporary shelters, and there were relief centres set up for those directly affected. And monetary and other assistance was offered in the immediate aftermath to try and help those affected. Again, as we know, Theresa May announced a full public inquiry, and this was shared by Sir Martin Morbick. The public hearings commenced on the 17th September 17th, and the first report was originally released on the 30th of October 2019, but much of its content was, of course, leaked. It focused on the fire brigade response, the stay-put policy, fire brigade training, the cladding products, building control sign-off, and the domestic appliance fault. Legal action is, of course, underway by a number of bodies, and the inquiries continue. Point of all this is that insurers, of course, have an interest in all of this. They were effectively represented at the stepping into the shoes of those that they had insured. And so the insurance market initially incurred a great deal of legal costs in making sure that the best possible light, if there is a possible light to shine on this situation, was put before the public inquiry. Now, in May 2019, the government announced that they would fund replacement of ACM cladding on private residential buildings. This is quite a controversial policy, as again, I don't think I need to explain to everyone, because there's a great deal of cladding that's been installed, and lots of it is on buildings under 18 meters in height. But the cladding remediation fund is for the benefit of leasehold residential buildings over 18 meters in height. Building owners are also expected to pursue reasonable claims against those who install the cladding and or the insurance companies, and pursue warranties pursuant to the Defective Premises Act of 1972. And any monies recovered have to be paid for to the government. So the insurance industry is bracing itself. Indeed, over the last probably 6 months, we've been involved in a number of claims where people are coming up to time limits within which to claim for defective cladding, etc., many of which are now failing, bricks falling off the cladding, etc. And so there is a huge rush at the moment of litigation to try and keep within the various time limits that are available for everyone. There have, of course, as you'd expect, been changes to building regulations. And as primarily the whole of the building regulations in the UK were found not to be fit for purpose by an independent report published post Grenfell. There are confusing rules within the building regulations, as I'm sure many of you will have come across. There's a lack of enforcement. And there's a system of, there's a culture and behavior of trying to do the cheapest job possible. The abiding impression drawn from the report is that safety was of the least priority in considering construction building standards and practices. It was, as it's been described, as a race to the bottom. Now, again, as you can imagine, we are still awaiting the final outcome of the inquiry. But all of the people involved in the Grenfell Tower, from the local authority to some extent the government itself, to all the suppliers, all the manufacturers, all had insurance of in some way, shape or form, primarily professional indemnity insurance. Insurers, therefore, have really responded in 2 ways. The first is obviously to put up premiums, because it knows it's going to get hit for a lot of these claims. It's also very worried as well about the results, the aftermath, with everybody trying to make recovery in relation to cladding installed, especially if it's defective, on various buildings, hence the growth in litigation surrounding cladding. There were changes to the building regulations in July 2019 in an attempt to improve the fire safety envelope of the building. A revised approved document deals with external construction, external services and insulation material. How these things will work in practice to improve things is unclear, but there is now going to be an emphasis on more rigorous enforcement via inspection bodies. And this is clearly going to prove vital if effective change is to take place. Fire safety issues are and will continue to be at the forefront of thinking of all levels going forward. Now, the market, the insurance market, has traditionally provided coverage for alleged defects, negligence, and respect of design and specification for construction professionals. I think that's common knowledge. And certainly prior to 2015, this coverage was quite wide. Again, when you're in a soft market as opposed to a hard market, you get two benefits. You get lower premiums, and you also get wider coverage. This is as a result of the competition. When there's lots of insurers competing for the same amount of business, they are much, much more likely to compete in terms of price, firstly, but secondly, in terms of what they offer in terms of coverage. So because they will say to the brokers who bring them business, look, come to us because our premiums are amongst the cheapest. And with us, you get a wider cover. The JCT design and build contract was first introduced in 1991 and established a key single point of responsibility on the part of the contractor for all design and construction elements. And the insurance market had been familiar with covering construction professionals and moved to provide for this new contractual feature. So the insurance market had always provided cover for building professionals, architects, surveyors, etc., contractors. But when the JCT design and build contract came in 1981, they moved to provide the cover for that. And insurers' appetite indeed and construction professional indemnity policies widened, and many new insurers entered the market throughout the 1990s. In addition, indemnity limits, which had been initially written as in the aggregate, so you would have cover for, say, £1 million, but that was the total amount that you could claim on the policy. That's what an aggregate policy is. However, increasingly, they offered an any one claim policy. So you could have £1 million cover any one claim, not in total of all your claims in the policy year, but any one claim. And the premium levels attracted more capital investment into the UK market. Also, you had many mainstream, what are called composite insurers. The best example is probably one of Sun Alliance, entering this area as well. And again, more and more people writing the same types of business leads to a reduction in premium and an increase in coverage. Excuse me. And so there was a further downward pressure on insurance rents. We are now, though, in a totally different place. So I said earlier, professional indemnity insurance identified in the review as the second poorest performing class of insurance in Lloyd's, following a review by the new chairman of Lloyd's. Premiums basically had continued to fall to such a level that in the event of a major market-wide issue affecting the insurance industry, and clearly, affecting the construction industry, and clearly cladding is one, then Lloyd's worked out that there would not be enough premium coming in to cover the losses to be paid. Premium levels, though, had continued to fall, and that had to stop. Plus, claim settlements, because of the wider coverage, were higher and their frequency of paying out had increased. Again, the disadvantage with offering wider cover is that it's harder for insurers to escape liability. And therefore, more people claimed, settlements were higher, and more people claimed more often because the aggregate part of the policy had gone. Lloyds were so shocked when they looked into this, they put 5 insurers on watch, which means you've been a very naughty boy. We are now watching every single penny that you spend. That's because you are very close to breaching the solvency markets, solvency requirements. And 2, they just basically had their membership revoked. They booted them out completely. Okay. There's also concern generally in the insurance market about the effect of Brexit on the construction industry. In particular, the lack of being able to easily obtain quality construction workers from the rest of Europe. Brexit has fundamentally changed that, and insurers are particularly worried at the moment about whether there will be enough skilled labour to carry out the various construction projects because of the difficulty now in getting in labour from Europe. Grenfell Tower, obviously, the potential for claims against design, liability contractors and construction professionals has massively altered the market and insurers' appetite for doing this. It is now virtually impossible, though there is one syndicate I understand that is providing cladding products. Insurers have made sure that their policy wording excludes any liability whatsoever for anything to do with fire safety. It's just not there anymore. So if you take anything away from today, the thing to really take away is that you will not get any cover for anything to do with fire safety. Insurers have effectively, if you'll pardon the pun, had their fingers burnt, and they aren't going to let it happen again. And these exclusion clauses are wide-ranging. And if I was you, I would never assume that you've got any cover for anything to do with fire safety, because the answer is you probably now haven't. It's therefore really worth reading your new policy wording to see what it is that you are actually covered for, because we are in this hard market. That means higher premiums. That means a reduction in coverage and exclusions for particular types of operation which the insurance market no longer has any appetite for. And one of them is, of course, fire safety, cladding, etc. We still don't know what the final outcome of the Grenfell inquiry is going to be, but it is, without any shadow of a doubt, worrying the insurance market. I think probably everyone will have heard that there are rumours, at least, that a judge is going to find that there was conspiracies going on in relation to the cladding put on the building. There is little doubt that it was the cladding that made this fire worse. And again, as has been widely reported, everybody is blaming everybody else without anyone coming forward and saying, actually, it was me. Because again, if they are going to pay out in claims, they can't necessarily admit liability because that invalidates their insurance. But insurers know that they are going to have to pay out very significant sums in relation to Grenfell, and they're bracing themselves for that. What they don't want to happen is this situation to occur again, hence the exclusion clauses that are now commonplace. So when you're renewing your insurances next year, I would very strongly suggest that you check with your broker as to what you're covered for in relation to fire safety, because it really won't be a lot. And if you are still specialising in the cladding market, and I do appreciate now the products are much better and fire resistant, etc., you will have to pay a lot of money to get any form of professional indemnity insurance in relation to that. And even then, I suspect the coverage will be caveated to a great extent. So it's one of the most dramatic market realignments witnessed in a single business line. I cannot stress enough that premiums are likely to stay high for at least the next 3 to 4 years, that there will be no change to insurers' coverage stance on fire safety. And I can't see anytime soon any other insurers coming into the market to start writing construction business. So the landscape has changed completely, and insurers' buyers now face a massive insurance cost. Cover implications and are in place, and it's put a lot of contractors in a very difficult position. As you will all know, in the JCT contracts, it says that you must have professional indemnity, you must have insurance as long as it is at a price that is commercially viable. Well, it's getting to the stage now where these premiums are so high. Have we got to the stage where it could be argued that they are no longer commercially viable? As we all know, the JCT contract is predicated with the fact that insurance will be in place. As I've said, many insurers have withdrawn completely from the market. We are going to have capacity problems for a few years to come. Premium levels, I've heard stories of premiums going up 6 to 7 times for the same type of business compared to, say, 3 years ago. Your policy excesses will also increase, don't forget that. At the same time as charging you more premium, reducing your coverage, they'll be putting up your excesses too. Limits of indemnity on your policy have been again dramatically reduced. Insurers will no longer pay out as much money or offer you cover for as much. Policies now will be changed back to the aggregate system. So instead of being able to claim £1 million every time you had a claim, you will now be able to claim up to £1 million as a maximum in the policy. But of course, these impact on design and build contractors, specialist trade contractors, construction professionals, and have a particular impact on approved inspectors. So I'll give you a classic example of that. My son moved into a new flat recently, traditional build, breeze block and brick. Building was under 18 meters high. Therefore, it shouldn't need a fire safety certificate. Surveyor would not sign off until the place had been properly inspected by the local fire brigade and a fire safety certificate obtained. Because he won't have any coverage whatsoever in his professional indemnity policy from now on in relation to fire. Of course, the increased costs are going to affect your budgets and ongoing cash flow. Increased excess levels again will also impact. Excuse me. Application of aggregate limits of indemnity might put contractors in breach of contract or for the terms of third-party warranties. The fire safety combustibility exclusions have a similar impact upon contract and warranty obligations. And as I've said, this does raise the question of, is cover available now at commercially reasonable rates? The answer is, it's getting very close. But then I'm not here and I don't know what the solution to not having insurance is going to be. Suffice to say, this is getting is a significant issue affecting the insurance, affecting the industry, as well as the impact, of course, on Brexit, caused by Brexit, and in particular with regards to the ability to get labour. So it is a tough time generally for the market. So where does this leave us? Well, those involved in design and specification and construction industry have a significant problem. I think there's no doubt about that. They can't secure the cover they're obliged to secure because it's just not available. What cover can be obtained is significantly curtailed and very costly. They have no wider cover of past activities, as a claims-made policy provides for cover to apply on the basis provided at the time a claim is made. So they do and will have a backlog of potential risks, which they may well not have any insurance cover for. Well, what can be done? Well, as I said earlier, look into all the contract warranty obligations and look at the cover restrictions as opposed to what your obligations are under the contract. Research and document any projects where you were specified or were responsible for the external cladding. Can't stress how important that is now. Look back through your workbook and see what construction projects you were involved in where you were responsible for the external cladding. You need to source them product data sheets for such cladding and see whether it was, how can I put this delicately, one of the better cladding products which had a high fire safety rating, or whether it was one of the less expensive products which didn't quite have such a high fire safety rating. Remember as well to qualify your tenders going forward. Think about the insurance aspect of it, remembering that you won't necessarily be able to get the cover that you need. So think about that, and when you're tendering for work, qualify your tender accordingly. One of the most important things you should be doing at the moment, and this actually applies across the board, it doesn't really matter what type of insurance you're doing, you need to start work early with your broker to profile the renewal presentation. Do not leave it till the last minute to think about renewing your insurance next year. Your broker will not have enough time to get you a decent quote. He needs at least a 3 to 4 month lead period where he can investigate the market, where he can come back to you with insurers as saying, well, yes, I might write the business, but I need to know a bit more about this and this. You need to allow time for this. Doing it at the last minute will just result, frankly, in a disaster. You either won't get cover or you'll be paying a huge premium for it. So start work early. Arrange meetings with underwriters. Your broker can do this for you to ensure that you put across your business case properly. So you can speak to the underwriter directly and say, look, we are a well-run business. We have had no claims over the last 12 years. We have had no involvement in cladding, or if we had, this was our only involvement with it. And if we were involved in cladding, we only use the very best types of cladding, etc. Okay. Equally, check documents and record of the insurances of other parties who are involved in the design process. Either they're engaged directly by you or become your responsibility. Make sure that they've got insurance cover. Don't just, if you'll pardon the expression, be fobbed off with them giving you a certificate of insurance. Oh, I've got a certificate of insurance. That, frankly, ladies and gentlemen, will not tell you what they're covered for, how much they're covered for, in what circumstances are they covered for. You need to be asking to see their policy wording, or at the very least, a summary of their cover to see what they are insured for. But ideally, it's the policy wording that you need to look at. Most construction contracts, as you know, provide for one party to recover costs from the other. In the case of breach, for the employing party, this will be damages, general or liquidated for late completion. For the other party, this will be loss and or expense and or damages for delaying events for which the employing party is held culpable for. Depending upon the contract, the employing party may or may not be held culpable for neutral events. So the conclusion, ladies and gentlemen, is not a very happy one, I'm sorry to say. We're in this hard insurance market for the reasons I've explained. It's not likely to go away anytime soon. Your premiums will be high, your coverage will be less, your excesses will be going up. It will be harder to get the insurance in the first place. And therefore, I hope I've given you some guidance as to what you should be doing to try and ameliorate this very unusual situation. But as I said, it's not a one-off. This is not going to go away, and it will be there for us for some significant years to come. Thank you, ladies and gentlemen, for your attention this morning. It's very kind of you. Thank you.
Okay, we do have some questions, John, as you would expect on this topic. Someone here's asking, in addition to Grenfell, Lloyd's Review, 737 MAX, and Brexit, does COVID also impact on PI insurance?
COVID hasn't impacted directly on the PI insurance market directly. COVID has impacted the insurance market through these, as you will probably have read about in the press, the business interruption claims. Now, I guess a separate subject almost in itself, but very briefly, as you know, the FCA took insurers to court with a number of sample policy wordings because insurers said, COVID-19 business had nothing to do with us, it's not covered. Fact is, there was cover in many policies, but really only, and this is the trick and what's becoming clear now, if you had cover for notifiable diseases, and these were not specifically listed in the policy, and if you were forced to close. There's a recent case, well, in the House of Lords decision, the House of Lords said, if you operated an office and you did do what the government told you to do and close your office, send your staff home and say you're all working from home, they've looked at it and said that was guidance and advice. There was no compulsion on you to shut your office. Okay? Therefore, it's unlikely, even if you had notifiable disease business interruption cover, that the policy would respond in those cases. Where you have the best argument is where there was an element of compulsory closure, and that clearly applies to restaurants, bars, pubs, cinemas, etc., which were mandated to close. Now, if they have the right policy, they will be able to claim. It's estimated that I think the potential liability exposure for that is about 2.1 billion. But it doesn't directly affect the professional indemnity market. But again, going back to the 737 MAX and the market-wide loss, that's going to impact across the board. So underwriters will have to use reserves from other classes of business, right, to pay the business interruption claims, which push premiums up again. So yes, indirectly it will have an impact, but it's not directly a claim on the professional indemnity market.
Okay. Someone else is asking, or stating, fire safety in buildings isn't just limited to cladding. Will there be any insurance cover for the rest of the building? What about fire safety inspections of existing stock and works arising which needs designing?
Well, I've seen 2 or 3 wordings at the moment which are out there in relation to anything to do with fire, and the cover is just not there. Now, there will be some policies that will be providing limited cover for fire. But you are going to have to, if you need that cover, you are going to have to speak to your broker very carefully on renewal. Say, look, this is what we need cover for. Can we get some sort of coverage? But in most policies, there's a blanket exclusion for anything to do with fire safety, fire inspections, fire, anything with the word fire on it, it's not there. I don't want to know. But yes, if you, as I said earlier, if you get to meet your underwriter and explain to him what it is that you do and what you need the cover for, then he may well get some cover for things like inspecting stock, etc. Generally, the word fire, insurers are running a mile. Like Shere Khan the tiger in the jungle.
It's another 4-letter word, fire. Yes. Okay. Someone else here was asking, how is uncommercially viable determined? Would a 100% plus increase in premium demonstrate that the insurance level is no longer commercially viable? That's talking under JCT form of contract.
The answer is, and I'll be 100% honest about this, I don't know. What is commercially viable for one company will not be commercially viable for another. I don't think, as far as I'm aware, I may well be wrong, that it's ever been put before a court as to what the term commercially viable means. But if you are a small construction company embarking on a reasonably large construction project, you won't be able to afford probably the level of premium that's required. In simple terms, then, it probably isn't commercially viable for you to do that work. But the short answer is, I'm not aware of any case that's gone before the court. But it is a real issue because it won't be. The level of premiums will not be commercially viable for some insurers now.
Okay. Someone else is stating here, given the potential exclusion of fire from PI, would it be specifically stated as excluded or simply not mentioned as part of the coverage?
No, there will be a specific clause, a specific exclusion clause, which you should be able to find in your policy wording. It should also be stated on your schedule of insurance as well in big capital letters. But if you're not sure, just ask your broker. Say, look, have we got cover for this? And again, I always like to use the word before. So don't do it when you're halfway through a project, a bit late then. You need to ring them up before and say, look, we're about to do this. What cover do we have? Don't wait until you've started or committed to start. Ask before.
Right. So that ask before is the new read your policy wording as far as you're concerned.
I think the two go very well together, Judy. Read your policy wording and ask before.
Okay. Right. That seems to be the end of our questions for today. So thank you again for your time, John. As always, a really interesting session there and lots of questions answered. We are back again this evening and we are joined by Mohammed Haq with the latest in his adjudication matters, do's and don'ts. And then tomorrow we have the property roundup. Lots of interesting guests tomorrow are joining Michael Shapiro, including the Chief Exec of OSIT, High Sheriff of London, and a couple of other interesting guests. You may like to log on and listen to that. The topic will be getting back to work as the city slowly returns to work. We're discussing the impact of COVID ongoing. So if you'd like a place on either of those, tonight's or tomorrow's, please email me seminars@silverllp.com, and we look forward to seeing you again soon. Thank you all for joining us and have a great day. Thank you, John. Enjoy.
Thank you, everyone. Thank you, ladies and gentlemen. Take care,
Take
Julie.
care.
I'm going to go.
Take care. Bye.